Hi everyone, and welcome back to this channel specifically devoted to the experts in law compliance and technology. My name is Tony, and today's episode will be about self-hosted wallets in light of the upcoming MiCA regulation in Europe. You know, it's like the old German movie, good old movie called Knocking on the Heaven's Door, where one of the characters is saying that, you know, in the heaven, what a talking about is just to see and how wonderful it is, and the same can be applied to the MiCA regulation in Europe. A lot of comments how wonderful it is to have it in place, and that's true. I mean, seriously, there are seriously good effects, such as, for example, you will be able to like if you are a crypto firm, it seems that you will be able to open more freely a bank account in Europe than what is happening right now. But there are certain other effects, and one of those effects will be related to self-hosted wallets. Why? Because self-hosted wallets do not have any CASP behind any crypto asset provider. And the questions about the effects of MiCA on self-hosted wallets specifically are about, first of all, part of the EU package on virtual assets is the new AML regulation, which specified just quite recently in the text agreed upon with the European Parliament, which made everyone very afraid in March this year, was saying that self-hosted wallets pose a significant risk of money laundering, terrorist financing, and sanctions evasion. You know, in order to onboard funds from self-hosted wallets, you need to do enhanced diligence, which is quite a serious statement, although quite understandable on one side. But still, this means that there will be a number of crypto exchanges, crypto asset service providers that will not be considering themselves suitable for accepting such a risk. So as always, I want to discuss these things before I make some kind of a serious expert video with some of my friends and experts in the area. So please, let's watch this, and maybe if you have any questions or any comments about this, you can ask them in the comment section or directly contact them to me. Hi everyone, and today we're going to have a talk with Yiannos Ashiotis. He is the founder and the partner in GRC Partners. He's the expert in compliance in crypto as a financial instrument and as a matter of investment. And we're going to talk about the thing that has been very much pressured these weeks, which is the European Union going to ban crypto transactions based on self-custody or unhosted wallets in the European Union or not? What is going on? We have recent news related to the voting in the European Parliament, and now also the so-called agreement of the committees in the European Union, basically on the new anti-money laundering regulation that will basically replace the previous ones that were actually directives. One of the things there is that basically the regulation presupposes prohibition of any anonymous transactions with crypto, and those that will be above the limit of 1,000 euros will be subject to mandatory KYC, but even lower than 1,000 euros will still be subject to KYC, together with travel rule and other requirements. Basically, this means that you will not be able to deposit cryptos to any centralized exchanges working in Europe. So, Yiannos, you are the expert in crypto investments, in crypto-related funds, etc., etc. So, tell me, what is going on?
So basically, crypto is not in the outskirts of mainstream financial services anymore. You've seen that mainstream financial institutions are utilizing crypto. They're setting up crypto funds. You have all this talk about the creation of central bank currencies, cryptocurrencies. So basically, you have this understanding nowadays that crypto is here to stay. And now, because of that, you have this urgency to start and kind of create a regulatory framework which is going to bring crypto in the realm of regulated finance and regulated payments. And this is exactly what you have right now. And the problem with that, however, is the fact that effectively you're taking something which was innovative and it was out there and it was initially created as a method of getting away from the traditional mainstream banking system. That's why you have the concept of this decentralized finance. And now you have all of the main players that are trying to kind of force it, to squeeze it into the existing financial services framework. And this is exactly what's happening. And this is why you have these imbalances, and this is why you have this sort of, I'm not going to say a mess, even though someone could argue that it's a mess, but this is why you have all of these issues that there's no clarity about what's going to happen.
Do you think it's correct to say that the EU is going to ban unhosted wallets? This is how it's pressed right now.
I would say yes and no. Think of it in the whole concept of financial services regulation, in the context of anti-money laundering regulation, and try to create links between the two so we can understand what's happening here. In terms of anti-money laundering, one of the major issues is the ability of anyone to hold value without anyone knowing that that person holds value. Remember that as per the Financial Action Task Force requirements, bearer shares were banned because there was no registry. So why would the European Union or any other regulator allow in the mainstream financial services system the ability of people to transact in anonymous accounts? Now, having said that, if you want to have your wallet and just store value without any interaction with anyone else, or with minimum interaction, meaning only peer-to-peer, so basically the value that you have stored in your own wallet is not going to be interacting with the main system, I don't see any issue over there. You can hold the wallet, but the moment that you will want to take some of the value of that wallet and put it into the mainstream financial services system through a CASP, through a bank, through an EMI, then that moment you will have to lose your anonymity. You're not going to lose the right to utilize that wallet, but you will have to lose the anonymity that you had with that wallet.
How do you think this technically will work? I mean, for example, you have, let's say, some wallet, which basically is Ethereum address in most cases. Most of the people I see, they are trying to transact in most cases in Ethereum. So basically, you have an anonymous address, and you need to make it verified for the CASP. So basically, then you just go to the CASP and then go through KYC procedure, and that's it. And then you need to show also the provenance of the funds that you have on your wallet, like exactly where these funds come from. Right now, as far as I understand, this procedure is not formalized, and this is, I guess, something that will need some help from compliance experts, basically.
So basically now, the responsibility is on the financial institution, is on the bank, to determine whether the explanation is going to be approved or not. There's not a lot of clarity. I mean, don't expect that you're going to have like a mainstream way of determining whether the justifications that are going to be provided are going to be accepted or not. Again, that's going to be based on the requirements of each of the crypto exchanges or the financial institutions or the EMIs that are going to be involved in the verification of these anonymous wallets. And again, this goes back to the discussion that we had about 3 or 4 years ago about the concept of decentralized finance. And I told you that there is no such a thing as a decentralized finance in anonymity once you have the word finance in there. So again, you can have your anonymous wallet if you just hold it by yourself. I mean, but the moment that wallet, that value will need to be interacting with any kind of traditional financial services setup, or EMI or banking or crypto exchange type of setup, that particular moment you cease to have the decentralization part, right? And you get into the matrix. In that moment, you become part of the matrix. I mean, there's no other way. Otherwise, you can just keep your wallet and just do bartering transactions with other users anonymously, but in the fringes of the system.
And imagine that if you do some kind of P2P transactions outside of centralized networks, then you're going to have a problem. With each transaction like that, you will have a problem, because when you enter the matrix, as you mentioned, you will need to show what is the provenance of the money, and then with each of these P2P transactions, you will need to explain who exactly was the person, and et cetera, et cetera, et cetera, because otherwise, there can be suspicion that it's kind of like, terrorist finance or whatever. It can be anything. It can be drugs. It can be, adult porn, something like that.
It can be sanctions. It can be anything,
yeah,
right?
Yeah. Basically, nobody bans self-hosted wallets, but if you want to enter with them to traditional, let's say, financial system, you will just need to go through KYC and also show the sources of your money. This is the bad part. The good part, as far as I understand, is that there could be, this is a part of MiCA transition, and so this means that in a very short period of time, I guess 1-2 years, something like that, MiCA is going to become the law, I guess, this year.
End of year, yeah. Basically, the countries have the ability to go for early adoption, but I don't think that any countries are going to go for an early adoption in the summer. Mm-hmm. I think that most jurisdictions are going to be waiting until the end of the year. So basically, yeah, MiCA is here. MiCA is here to stay. And again, we live in very interesting times, because we see that basically crypto is now becoming completely mainstream. I mean, it's incredible how many inquiries we have from mainstream financial services companies, institutional brokerages, institutional asset managers, that now are inquiring about the provisions that they will need to adopt in order to be able to offer the clients crypto. The oxymoron here, I mean, the paradox here is that you have crypto that was created by a group of people that wanted to get out of the mainstream system.
Yes.
And now crypto is becoming mainstream, right? And you have all of these, institutionalized corporates that want to embed crypto into their own operations. So it's going to be very, very interesting, and we see a lot of demand, and we see that there's a lot of commotion, and it's definitely going to be it's going to be very, very interesting to see how this is going to play out, especially with the challenges that the regulators are going to have in terms of regulating all of the crypto activities that are described in MiCA.
So this means when MiCA becomes the law, this will mean the new chapter in the European economy history, I would say. And so this means that we're gonna have the uniform rules for crypto all around Europe. And finally, we're gonna have passporting system, where basically the company PASP registered in one country in Europe will be able to operate in any other country in Europe, in European Union, freely, without any frictions and problems.
Don't forget that theoretically we have the same thing with MiFID, which is the Financial Services Directive. Now, a couple of interesting points here. The first interesting point is that MiCA is a regulation, right? Which means that the difference between a regulation and a directive is that directive needs to be adopted into the national legislation of the member countries of the European Union. Whereas a regulation, just like the GDPR, for example, the data protection, because it's considered to be more important, is basically in effect the moment that the European Council decides that it's in effect. So basically it doesn't need to be ratified, doesn't need to be embedded into the national legislation, which means that it kind of gives an indication about the importance that the European Union puts on the markets in crypto assets, on this piece of legislation, of the European legislation. So this is the first thing. The second thing that we need to take into consideration is that, yes, we do have passporting, but perhaps, just like MiFID, there might be a little window sometime down the line whereby if specific members of the European Union see that this passporting is going to be abused, they might come and push ESMA, which is the European Financial Services Regulator, for intervention measures, meaning that they might come and say, okay, there is passporting, but exactly because we have significant players that are offering these services from other jurisdictions, and we think that the rights of our own citizens are in jeopardy here. We want some sort of representation of the passported cast into our own country. This might be something that might come to play. I don't know, nobody knows. But this is very similar to what happened with MiFID. So basically, I need to have some say into what's happening. I need to have some control. So this might be one of the things that might come into play a year or a few years after the implementation of MiCA.
No, okay.
Another very, very important thing that we have in MiCA for the first time is this concept of centralized supervision. In MiCA, it's explicit that if you want to issue any kind of significant token, and the definition of a significant token is that it has a value of more than 200 million euros, then we don't care where you are, in which country in the European Union. The approval is going to come from the European Banking Authority. So basically, for the first time, we have this concept in writing, this explicit concept of centralized supervision by the European Banking Authority instead of the National Competent Authority in this case.
Or basically ICOs, something like that.
Yes, ICOs for stable coins.
Yeah.
Primarily, right? But again, it's significant because this is not something that we had in the past. In the past, ESMA might kind of formulate a college of supervisors if you had a significant financial institution that would be providing services in more than one European Union country. And that was very rare, very exceptional, and only done for the extremely large banks or financial institutions. But now it doesn't matter where you are. If you're going to be issuing any kind of significant token, then basically the EBA is going to come and regulate you and give you the approval. So again, this is significant.
Yeah. That's very significant, especially if the person wants to have access to European financial system as a result of this issuance. You will need to have this, because right now the situation is, if you go to any European bank, in most cases, you will be denied if you use any tokens. If you are in crypto space, in most cases you will not be able to open a bank account even. So this will change. This will change with this law. The new AML regulation that is coming together with MiCA, as far as I understand. In fact, it's also a regulation, right? So it's the AML it's the first AML regulation, which is not the AML directive as before. And this will be the opportunity for every crypto service providers to be accepted for European financial system.
This is a hope, because it's not a guarantee that. And again, you will always have this kind of conflict between traditional banks and alternative means of payments, which is what crypto is nowadays anyways. But just because you're going to have MiCA in place, we can only hope that most banks are going to start looking at crypto in a different way. And again, it's going to be very, very interesting to see which banks are going to be willing to adjust and adapt and start accepting crypto organizations as clients. And again, what's a little bit strange here is because in MiCA, again, it's explicit in saying that if you're going to be issuing any kind of a stable coin, then basically that issuance has to be done by an EMI, not by a crypto exchange, not by a crypto asset service provider, but by either a bank or an EMI, an electronic money institution. So now you have the banks that actually take a very, very central role in the crypto ecosystem. And you have this paradox again that most banks do not like crypto, and they do not accept crypto as clients or as part of their operations. Now, definitely, again, we see a lot of demand for electronic money institutions and licenses for electronic money institutions, exactly because if you want to issue a stablecoin, you will need to have an electronic money institution license.
Obviously. Yeah.
But it's going to be interesting to see if you're going to have the adoption of these crypto issuance services by any of the traditional banks that exist in the European Union.
So in general, we're gonna say that you can use your self-hosted wallets. It's not a problem. I myself have several wallets like that. But if you want to exchange this money for euros at a certain moment, first of all, this instrument will give you this opportunity legally to do it. And second of all, for that, you will need to do KYC. Basically, that's it.
This expectation of what's going to happen.
Yeah. If you have any questions about this thing, in the like, how it gonna work in the future, anything like that, you have Yiannos, Yiannos Ashiotis. He is the expert in this type of transactions and in this type of the business. So you're gonna be able to talk to him for that. Thank you very much, Yiannos. I guess we have covered this topic.
Thank you for giving the time and for the interesting discussion. Wishing you guys all the best.
Thank you very much.